To understand discounting, let's consider a mining company that estimates a cost of $20 million to restore the land to its current condition after 50 years. The value of $20 million in 50 years would differ significantly to its value in the current year. This difference in value is influenced by the discount rate used. The following discount rates were presented to the accountant, who was asked to calculate the present value of the environmental provision. Which rate should be used? IAS 37, paragraph 47, provides 3 rules relating to the discount rate. The first is that the rate should be pre-tax. Thus, all the rates presented in the post-tax column are incorrect. The second rule is that the discount rate should be adjusted for the market's assessment of the time value of money and for risks specific to the liability. So the pre-tax risk-free rate is incorrect, and the rate adjusted for the current market assessment of the time value of money would not be correct, since it does not take into account the risks specific to the liability. The rate of 10.5% is a pre-tax rate that has been adjusted to the market's risk assessment as well as the specific risks relating to the liability. So far, this rate is correct. The third rule is that the rate should not be adjusted for risks that were already taken into account when estimating the future cash flow. For example, if there was a risk that, when rehabilitating the land in 50 years, the government might request the company to plant specific types of trees, which is likely to be in a limited supply. If the trees can only be sourced from a supplier who has complete monopoly over the supply of trees, it is likely to result in excessive costs for the company to satisfy its rehabilitation obligation. In accounting for this risk, the company can either adjust its cash flow projections to include the possibility of this occurring, or it could adjust the discount rate to account for this additional risk. In terms of IAS 37, paragraph 47, if the cash flow estimates were adjusted, the discount rate should not be adjusted for the same factor, as this would result in double counting. Thus, the rate of 11.5% is incorrect, as the risks have already been accounted for in the cash flow estimates and should not result in an adjustment to the discount rate. 10.5% is the correct rate that should be used to discount the provision.